Hello friends, in the series of BSE IPF, I welcome you all. Yes, we will be talking about the same topic which you are seeing right now in front of you, which is nothing but arbitrage fund. Why arbitrage fund now? The answer is simple. Market is at top level. Most of the investors are thinking about the option to book the profit and take their funds to some another option. But the investors who are familiar with equity products, they are not sure about the debt category products. So they are looking for some or the other options related to equity only. And at that point, the suitable and the best option comes as arbitrage fund. So, hello friends, in the series of BSE IPF, we will be talking about arbitrage fund, and yes, as we know, mutual funds sahi hai. Because it is an indirect way to go into the stock markets when an investor is not sure about the stock and the script to buy, and still he wants to or she wants to take the advantage of equity or even debt category, then mutual funds is the best option. And in the mutual funds category, arbitrage fund. Why arbitrage fund now? We will try to see in this session. All these sessions are coming to you by BSE, IPF and SEBI, so don't forget to say them thanks after this session because they took the initiative and they want all such small sneak peeks should come to the investors so that they will be updated with the knowledge and the information. And once they are updated with the knowledge and information, they will be empowered with knowledge and they need not to get dependent on any third person. So come on friends, let us try to know and learn about arbitrage fund. All you need to know about arbitrage fund: as a market over record high, nervous investor looking to shift the portion of their money to safer products with a lower tax. Why lower tax? We will try to see it further. So the investor who doesn't want to go to the another category or debt category or a mixed of it, debt and equity, they are looking for any other option or different option which is an equity category only, then arbitrage fund is the option for them. Arbitrage funds are considered to be the safest amongst the equity oriented schemes. Yes, in equity oriented schemes, we are having the platter of different schemes in different categories. One, we can consider it as a sectoral fund, which is highest in the pyramid, which comes with the highest return and the probability of the highest return along with the highest risk. Then the large cap fund, mid cap fund, small cap fund, multi cap fund. Then there are some flexi cap fund, and then there are balanced category. But before that, before the debt comes into the picture or the blend of debt and equity comes into the picture, the arbitrage funds are there, which are considered to be the safest among the equity oriented schemes. And such schemes saw the inflow of more than 5,000 crores in January 2021. Why we are discussing it today? We are in a Feb 2021. Why we are discussing it today? Because we saw the numbers that a huge number of money is coming into the arbitrage fund. 5,000 crores. When we talk about the mutual fund industry of few lakh crores, the 5,000 crore is not a big number. But yes, the investors who are looking for the equity oriented option, and they have already gained double digit profit in their equity funds, and now they are not sure about the economy and they are not sure about the returns in the equity market or in their portfolio. So they are looking for some option which will generate a return slightly more than debt fund and in the equity category. Then arbitrage fund is the option, and that's why even financial planners, these funds are loved and recommended by financial planners due to efficient tax treatment. What is a tax treatment arbitrage fund goes under? We will try to see it now. But before we proceed, we should always know that what is arbitrage fund. There is a separate series on our YouTube channel about the mutual fund and the types of mutual fund. We have already discussed about the arbitrage fund before, but now we are discussing because there is a huge inflow in arbitrage fund in 2021. What is arbitrage fund? Arbitrage fund is a leveraging difference between the cash and derivatives. When there is a huge volatility in the market, there is opportunity in cash and derivatives. We will see the difference in cash and futures, and that is the opportunity for the fund managers to grab that profit, to encash that difference, to encash that difference between cash and derivatives, and transfer it to the investors. So arbitrage is encashing the opportunity between cash and derivatives, and that is what is done in arbitrage fund. When there is a more volatility, more opportunity and the probability of more opportunity is there. Why do investors like arbitrage fund? Arbitrage funds are considered to be safest in equity oriented schemes, also safer than debt funds, because debt funds are carrying the debt fund carries credit risk, where in a arbitrage fund there is nothing like that. Arbitrage funds are treated as equity funds for taxation. We know that equity oriented schemes and debt oriented schemes and the taxation for it, so they are treated as equity funds. So 15% we will just see now taxation benefit of it if investors are holding less than 1 year, because when we say arbitrage fund, the returns are not lucrative as compared to the other equity oriented schemes, but definitely they are safer in equity oriented schemes. So as we say that they are safer than the other funds, that means the returns are lesser than the other funds also. And if the investors are holding it for less than 1 year, because they just want to park their money to avoid the uncertainty in the economy and to avoid this volatility, they just want to park with some lesser return, again they will come back to the equity oriented schemes. And if they are holding it for less than 1 year, they need to pay just only 15% on gains. After 1 year, 10% as long term capital gain tax is there if your gains are more than 1 lakh rupees. If the debt fund, if HNI is selling before 3 years, and then the short term capital gain tax is 30% in debt category. So 15% and 30%, this is a huge difference on the gains. So that's why investors like in terms of taxation also, as it is a safer than other equity oriented schemes, people usually prefers this. Then volatility plays a vital role. More volatility, more opportunity. Higher level means high volatility. Yes, we have discussed it yet and discussed it now. And when we talk about the returns are not very lucrative. We have also spoken about it. Last 1 year over 3% return, and the last 5 years around 6% return. So if we are expecting returns more than liquid funds or more than some other debt category funds, then these funds can be the option. But this is not the video for suggesting that go for arbitrage fund. Whenever we want to take any decision, we should always consult our financial advisor first. So this is all about arbitrage fund from our side. If you want to know more about any other different attractive topic, then please suggest us. We will come back to you with that topic. Thank you very much for liking our session, and don't forget to write your name along with your email address in the comment section. Also, you have to say thanks to BSE, IPF and SEBI because they took this initiative. Thank you very much. Stay tuned.